Good morning, everyone. Welcome. I'm glad to have the first session of CFO Connect. I'll wait a few seconds for everyone to join. In the meantime, a little bit of housekeeping. Feel free to add questions during the chat in the Q&A tab. And also I created a little poll on the right side to ask who do we have in the audience. So it's quite interesting to see we have a nice mix of people working in Series A startups, bigger scale-ups, some corporates, and some people that are not in the finance teams at all. So really glad to have such a good mix today. So before we start, I thought I would introduce myself a little bit. I'm a partner at 8 Road Ventures. We're a global VC fund with offices across the globe, US, Asia, Europe. 8 billion under management and around 250 portfolio companies. We mostly focus on scale-up stage, meaning that we like to invest when companies have fund product market fit, and we try to go and help them expand internationally, but also scale their go-to-market teams and oftentimes scale talent. We invest all across sectors in technology. We have a nice mix of consumer, B2B SaaS, fintech, and healthcare companies that you can see at the bottom. And we're happy investors in Spendesk. So today, I thought we would discuss two different topics. I think the first one is really talking about the role of the CFO and how much it's been changing. And after that, I thought I would also give you a little bit of perspective of what we see from the investor standpoint and how the European market has been evolving really quickly on the tech side. But the first topic is really to talk about the role of CFOs and finance teams in startups and scale-ups. And it's a topic I really like because I find that the CFOs are really the unsung heroes of startups. There is not a lot of discussion that are about CFOs or about finance teams, and you see a lot of events, a lot of podcasts for founders, for tech teams, for marketing teams, and very few for finance teams. So I also think this event in itself is a great initiative. And as most of you will know, the role of a CFO has been changing tremendously in the last few years. It's becoming the true engine room for startups. And not only they do all the groundwork of scaling up, setting business processes, reporting, but they're becoming increasingly important in strategic decisions, fundraising, cash flow, business advice. And that role has evolved considerably over the last few years. And I was trying to reflect a little bit for this session. What are the drivers of that? Why has the CFO role changed so much? And I think the first driver is technology. Clearly, finance teams are now able to gather much more data in the cloud in an easy manner. And they're able to focus on analyzing that data and making decisions as opposed to just being focused on making the accounting and just getting the data. So I think technology has been an enabler for the finance team to really go into more strategic projects and discussions, and we'll talk more about that. And I think the second driver has to be COVID. And we really observed that even in our portfolio. It's been such 18 months for finance teams because they really went from March 2020 when, panic moment. A lot of our startups were focusing on, do we have enough cash? Do we need to reforecast? Do we need to change our plans? Do we need to freeze hiring? Do we need to get rid of people? Very difficult decisions. So huge responsibility on finance teams. And fast forward, 12, 18 months, forward, now we're in this a very active tech environment where it's all about fundraising and showing momentum. And I think it's been such a good test for finance teams to be able to show the two sides of the job, which is really being close to cash, being able to quickly reforecast the business, but also being great support of the CEOs and the founders when they want to do fundraising and strategic activities. So I think most of you will know that, but how is the finance team role changing? I think there are a couple of big changes happening. The first one is really this move from internal focus to external focused. And I think historically, the finance team has always been seen as a team which is really at the service of the other teams to manage resources, have the accounts, but they were less an externally focused team, which was meeting candidates, meeting investors. And I think that's quickly changing. And you see CFOs now being much more effectively on stage and in front of those conversations, in front of conferences, in front of podcasts, because they're becoming much more visible as a function. The second point, when I say from cost control to growth levers, obviously it depends a little bit, where your company is at, but I think there is a really interesting also mindset change from being in the past and in the understanding of what are the margins today versus trying to understand what are the big levers of growth, what are the key KPIs we should track, and where could we push and accelerate our growth as a company. And that probably brings me to the third point, which is what I call retrospective as opposed to forward. I think that's the clear difficulty of the finance team job is that one part of their brain has to be about the past, because you want the accounts to be correct, you want the reporting to be done, you want at some point to get audited, and you want those things to be 100% correct. But the strategic decisions is all about the future, right? Because the past you can't change, and especially in a fast-growing startup, it's all about what are the levers, where are we going, how do we enable growth, how do we see bottlenecks before they arrive, and so they need really, I think that the two sides of the brain, which is I'm able to understand well the past, but I'm also able to focus my energy about the future, which I can still change. And probably a nice link into the last one, which is I think in the past the finance team were very much seen as executants, and so the C-level would take decisions and the finance team would execute them. And I think increasingly we're saying that the CFOs are effectively very close to the board, very close to the founders, and they make those decisions. They're the ones formulating the strategy as opposed to just being in execution. And that brings me to the new skill set needed for that modern CFO. And I was trying to reflect a little bit, what are the new capabilities that this new modern CFO needs to have? And I think the first one is communication. I think the main responsibility of the CFO increasingly is really to translate numbers into the language of every stakeholder. So are they talking to the board? Are they talking to investors? Are they talking to future investors? Are they talking to a future recruit? And each of those stakeholders probably needs to hear things in a slightly different way. And it's very, it's very difficult to find like what are the right level of detail, the right metrics, the right way to explain numbers to different people. That's why I put communication as first. And it's all about storytelling, which again, I think in the past, you could imagine like finance team where it's just about doing the accounts. Now it's more like, what is that telling us? Like, what's the story we're looking at? The other reason I put communication is it's quite important for finance team to build strong relationships. And that's what I meant in the previous slide about being outward facing. Is it's also essential for the finance team to build those strong internal and external relationships. So you'll see that they have relationship themselves with the team internally, with potentially investors, stakeholders, board, angel investors. And it's not only the CEO who holds those relationships, it can be the finance team directly. I think the second thing I wrote was automation and technology. I think that's very pivotal, because all of this is only possible if the numbers are more and more automated and tech-enabled. So that's something we spend a lot of time with our portfolio companies, is trying to make sure we have strong bases and strong tools and strong tech stack and strong integrations to make sure that the time is not spent trying to do things that could be automated but are manual for some reason, but is spent on doing actually things that add value. And I know it sounds easy to say, it's obviously much harder to do in practice. And it's also continual improvement, right? So especially if you're an early stage startup in the beginning, you can't have like a full stack of integrated things and automation, but obviously as the company grow, it's quite important to rethink, do we have the right processes? Is there any way we can automate things better? And obviously, if you fast forward, I know some of you work in large corporates, that's where you can start seeing robotic process automation, OCR, and effectively trying to automate as much as possible in the stack, so that again the energy is not spent collecting data, but reading the data. The reason why it's important as well is because of velocity. So not only it will save time, but it will also create velocity in terms of ability to spin out numbers. And that's something I saw very much with COVID, when we were trying to reforecast with companies in a very, very quick manner. You could see a very big difference between some companies who had automated processes, or maybe using Power BI or using different integrations, and were able to reforecast in a quick manner, and some where the CFO had to work all night to just send something, which obviously isn't great. So as most of you will know, it's critical to set up the right tech processes and data function. Adaptability, I think, is a bit similar. It's all about being agile, and again, I think it's something I think is quite difficult in a human being, is trying to understand which processes need to be 100% right. So end of year accounts have to be correct, tax has to be correct, cash levels have to be correct. But which processes can be 80-20, where it's all about getting quickly to a decision so we can move on and use data for the best. So resource allocation, maybe budget, maybe things like that. It's all about being agile. And so I think, again, it's the skill set of the CFO to know, okay, this is something we need to get 100% right and focus a lot, and this is something where we need to be fast, and actually we need to just have the key lines correct. I think at World Facing, I talked a little bit about that already. Leadership, I think, is important, and it's not something very specific to finance team. I think it's something we see in every different team and every different leaders in companies. Increasingly, you will be familiar with that. There is a war on talent in Europe. It's really hard to hire. It's really hard to retain. There is a lot of capital flowing in the market, and it's all about being inspiring for people to join you and want to work with you. And that's all about leadership. And so again, I think the role is really transforming to being output driven. So let's do the accounts, to be an inspiring leader that someone like the future people want to work with, and that will attract talent. Because if you attract great talent, then you can rely on them, and you can form them. And network obviously goes with that. That's something I really encourage, and most of you are part of CFO Connect, so you already know how much network is important. But network will help a lot. It's much easier if you have a couple of CFOs or financial directors in similar similar businesses, similar geographies, and you can just pick up the phone and say, hey, like, we're looking at these things, how did you guys do? Or we're thinking of changing a tool, have you tried it? It will save immense amounts of time. And talking about saving time, one thing I wanted to talk about is, hopefully, as automation and technology automates the numbers, there is more time for those strategic initiatives. And I just picked 4 of them, which I think I would still like to see more of in companies we talk to. And I think it's obviously hard to make time for everything, but I think those are probably 4 things where there is always more that can be done. The first one is really thinking about pricing, packaging, bundling, billing cadence. And I often see that it's something that just happens usually in a company, and no one really has the time to rethink about it or question it. And that can have a big impact. Obviously, pricing, for obvious reasons, but even the billing cadence, the cash collection will have big impacts on your cash flows, obviously. And so having a good understanding and taking time to rethink or iterate or try things in this area, I think will go a long way. And again, I think it comes back a little bit to the agility and the velocity is just trying to say, hey, like, let's try this, see how it goes, see what impact it has, and be thoughtful about you want to keep those changes. The second one is go-to-market and tech ROI measurement. Obviously, this will be led by your respective tech and sales team. The reason I put that in is because we always have a question about resource allocation, especially if you're VC funded, but I can imagine if you're working in a large corporate, equally, you have to justify resource allocation. And usually people think about absolute numbers. So they think, can we put like 2 million in tech next year? That's one way to think about it. But obviously the other one is to think, we'll invest as much as possible as long as the return on investment is X. And so for go-to-market, I think if you have a good understanding of saying, look, if we see good traction, if we see good unit economics, that's how we're going to measure if we want to invest less or more. And for technology, it might be harder to measure, but you can say, if I have good signals that I'm delivering on product roadmap, I'm willing to invest more. Equally, it goes the other way. So if you see we're becoming less and less efficient, quickly you can turn the tap and say, hey, let's wait a minute, because we're making a lot of investment here, but it's not spent in a right way. And again, it sounds obvious, but I find like it's actually quite hard to get that going, and be candid about, measuring almost in real time, like, is something working, is something not working. Leading indicators of momentum. I think that's also something that I feel is very important, is really, again, trying to focus on what's going to tell you the future. And I find sometimes, like, again, not everywhere, but sometimes, it's the numbers come in and then we look at them and we try to understand why they are. And obviously what you want is try to know before it happens and have a leading indicator that something is happening in a good or in a bad way. And so I think the finance team responsibility with the whole company is trying to educate people on what those leading indicators are. And they can be very different depending on your sector. It can be usage, it can be obviously quota, pipeline, conversions, if you're very sales driven. But I think anything that tells you the future, I think, needs to be treated and very well understood. And oftentimes I still see a bit of a disconnect where they might be tracked in different teams, but they might not be really understood by the full company. And finally, I think in strategic initiatives, obviously M&A, debt funding, I put revenue-based financing. I think that's another skill set that we see increasingly in scale-ups, is for the finance teams and the CFO in particular to start exploring some of those options. could we grow faster if we acquire somebody? Could we get more debt funding? Obviously, there are a lot of offers like government, not government, could be VC finance, revenue-based financing, at the moment, relatively affordable rates as well. So I think it's also a good, a good thing to consider. So what's next for finance teams? I think, look, there's never been a better time to be in finance, I think, and especially if you're working in technology, in a fast-growing startup, it's increasingly an important position. And I just put a couple of things. I mean, as I mentioned, I think increasingly the finance team are really becoming a change agent and a source of competitive advantage for a startup. So it's not like, oh, we need to have them, but it's more like they're going to help us to thrive. And I think increasingly becoming a role of leadership and just attracting talent in the company. I think M&A, we see more and more of M&A in between startups or by large companies buying startups. So I think that will become very interesting for finance teams to just get more exposure. And obviously IPOs is something if I have time, I'll show you some metrics, but it's very interesting. There's much more IPOs happening in Europe than ever before in technology. And again, great challenge for finance teams. Obviously, the job changes completely when you talk about becoming a public company. And so I think if you're working as a finance leader, exciting to think that now it's much more likely that, potentially you could list your business one day and become a finance leader of a public company. And the final thing I said is board and advisory. I see a lot of finance leaders making angel investments, being on boards, being advisors, which is again around creating that network of knowledge. And I think it's fantastic. So, a great opportunity for younger people in the ecosystem to learn, but also for existing finance leaders to discover that side of the equation, which is potentially sit on boards, advising others, and investing themselves in companies. I'll quickly take some of the questions, and then if I have time, I'll show you some of the metrics on European tech. How do you measure tech ROI with a lead time of 6 months? Yeah, look, yes, that's a very good question. In a high velocity startup, there is a lag for knowing if an initiative is good or bad, and sometimes you have to give time to things. So I'll give you an example. Also in marketing, we have a couple of companies who do TV advertising, and it's very hard to attribute. So you obviously need to be careful not to look the next month's number and say, oh, it's not working, let's stop TV, because you might make wrong decisions that way. So obviously you need to be thoughtful, but that's why in general I try to focus about leading indicators that are not necessarily like signs of success, but at least they give you a good sense of are we reaching some milestones into something. I'll give you another example. One thing I often see is if companies miss budget, it's often because they missed hiring targets. And then we end up the year and people say, oh, we just couldn't hire enough salespeople. Well, you could see that during the year, for example. So if you start seeing we're lagging in recruitment, there's either you hire more recruiters and you see, okay, I'm going to have an issue because those salespeople are not joining, so I will never reach my budget, or you change the budget. But I think at least it gives you a sense that it's just gonna be hard to reach my target if those people are not coming in. So just trying also to link the different teams internally. What do you think is a decent team composition for finance team in a startup environment? Team composition, it's hard for me to really give an opinion here. It will depend a lot on the stage. I think the earlier the startup is, the more you're looking for people that are a bit like Swiss Army knives, because they have to do a bit of everything, including sometimes legal, including security. And obviously, the bigger the company goes, the more you're looking for experts. And so I think that's also how you have to think about your team is over time, you may need a general counsel, and then you have maybe like a separate legal team. Then you start to say, okay, maybe I'm going to have a separate data team, which is much more around analytics, and the rest is of the finance team is focused on accounting. So you can start having those distinctions. How do you challenge IT people? They have the technical knowledge and not necessarily cost-driven mind. Yeah, it's tricky. It's tricky, especially when you have founders that are not technical themselves. And I think, again, I would try to have external help. So oftentimes, I think having a mentor could be someone on your board who has experience of tech projects can be helpful, because they can be the ones challenging. So saying, are we making the right decisions by, I don't know, replatforming, for example, our entire e-commerce suite? If it's like going to be like a 2 million decisions, you probably want to have at least someone else outside your team that takes a look and thinks, might be the perfect decision, but at least it will give you that external opinion if you're not able as a founder or as a CFO to make that call, because it's obviously not you can't be an expert in all topics. What are your characteristics? Are you looking for a growth startup CFO, head of finance? You have a couple of different backgrounds usually. You definitely have, I would say, the classical background, which is people coming from accounting, Big Four, audit. Increasingly, we see also people coming from strategic consultancy, which helps because they may have a broader understanding of businesses. So I think it could be a mix. I think in general, depending on the profile, and also to answer someone else's question around team composition, I think depending on who the CFO is, you can complement the team, right? So I'll give you an example. If you take, for example, also an investor who joins as a CFO, he might not be the best at very technical accounting, tax. So you will supplement him with someone who really has experience of doing that. On the other hand, if you bring someone who is a very deep expert knowledge, maybe you can bring someone else in the team who can be much more around data analytics and maybe seeing things from a KPI investor standpoint. So I don't think there is a best profile, but I would try to find complements so that you don't have a team that is 100% one way, which, by the way, is probably true for every recruitment in general. Like the more diverse a team is, the better, right? What would you recommend for a CFO who is aiming to grow into board advisory roles? First of all, I would say great. I think that's fantastic. Would love more of those. Send me an email. We're always trying to find great mentors for our portfolio. What I would recommend, I would say you can do angel investing. Angel investing is becoming increasingly affordable. So it used to be something where you could only do if you could invest like very large checks into companies. Now in Europe, I see people investing £5,000, £10,000 in a company. So it doesn't have to be massive amounts, and it gives you that experience of seeing another business model, other people doing something, and getting in touch with investors, because I think in general investors are really keen to expose their younger startups to people who have experience. So if you're working in a corporate or in a scale up that has seen a lot of that transformation, it will be invaluable expertise for someone else who is just started. What would you recommend for a CFO who is aiming to grow into... Oh, sorry, I took that already. How is remote work influencing the work of CFOs in these current times? Remote work is influencing probably every team. I won't claim I have the perfect answer. I see most of our companies doing hybrid or fully remote, which I think is becoming increasingly also a demand when you're trying to find top talent. So I would be surprised if someone else tells me, hey, we're going to go back like 5 days a week in the office in the headquarters. I would, we very rarely see that. as most of you will know, it's been a great challenge on keeping the company culture and also training young people. But I think we have a lot of tools now. Obviously, a lot of tech companies are solving that, but also you can rethink a little bit how you interact with your team. So, maybe it's like we spend a couple of days every quarter together and we do a big social event for the whole finance team. And then all the rest of the quarter, we work at home, right? So I think people are also experimenting with those, with this alternate mode, which I think works well. I think we're going to be up for time, unfortunately. So I'm glad to see so many questions. I'm on LinkedIn, I'm on email, so feel free to reach out directly if you want to keep the conversation going. But I was delighted to join the session, and I think it's such a great event at CFO Connect. So hopefully you enjoy the following sessions.